Hello and what's up to you all awesome and beautiful minds. It is my name is Abram and my man is in the building, Mr. Ashraf. How's it, man?
Good, man, and how are you doing?
I'm awesome. You know, I'm happy at the same time, but another part of me is not around. You know, the A squared team, it's always been the triple A guys.
Absolutely, guys. And I think very important for me at this stage, guys, matriculants and all our buddies out there, a tribute to a very, very dear friend, a brother to me, who was laid to rest yesterday. And we pray that the Almighty grants him the highest stages in paradise. He has left a legacy for us, and we want to pay tribute to that legacy. Guys, do well in life sciences for our brother Aslam.
So true, and I just can't stop going over the messages on our Facebook page, looking at all of them. You just can tell that each and every one shares the same sentiments that we have, that indeed he was an incredible man, a great man. His work is following him.
What a remarkable person to have known. I think we should rather, yes, we are sad that he has left us,
Yes.
but I'm sure he's gone to a better place. But let's treasure the moments that we spent with him.
So true.
Really awesome.
So true. And John said yesterday, if there's one thing that we could all do, is just to work hard, extra harder, and make us, Aslam so proud. Let's do it for Aslam this year. Your life sciences will never be the same, we understand, but now do it for him. We still have some memories left with him, of him. Let's make use of them, and you know, we love him and we always miss him.
And we will definitely miss him, but a great man who's left a legacy for us. Let's think and be happy about his legacy.
Thank you. One thing that you'd like us to do is to continue and to learn more and be happy.
Absolutely. He'd want us to say, guys, go on.
Go
do
on.
what you guys do best.
Of course. And what are we doing today?
And today, AB, we're focusing on company ledger accounts. All right? Now, remember grade 12s? That you must have done company ledger accounts by now already in the school curriculum. So what we're going to be doing today is we're going to refresh for you. We're going to make sure that you really understand these accounts, because once you understand them, they crop up right through the entire curriculum. And if you have some flaw, then definitely it's going to affect you later in the curriculum. So make sure that I have your mind, your body, and your soul. Pay attention, guys. Here goes.
Of course.
Right. Now, if we look at our summary notes, the Companies Act, as amended in 2008, right, has made certain changes with regards to the accounting curriculum. What changes are there? For example, it talks now about shares of no par value, right? In other words, we say now that the shares do not, please, I repeat, the shares do not have a par value. This means that if you are working through past question papers, ensure that you amend those activities or questions, because they will have a par value and you will have to change that to make it applicable to what is examinable. So one, shares of no par value. In other words, it tells you that the shares will have no values attached to them. So when we sell those shares, we're actually selling them at an issue price. Okay? More about that just now. Number two, it makes mention of the buyback of shares. This allows for the company to repurchase its shares from its shareholders under certain conditions. Okay? So one, no par value, not applicable anymore. And number two, shares, we can buy back or repurchase shares. That means the company can repurchase its shares from shareholders. The main reason for the dispensing of the par value, okay, we're not going to go into detail there, but the main reason we did away with it, because it has no meaning. That is why we don't deal with par value shares anymore. So now, in terms of what we are talking about, we are saying that shares will be issued at an issue price. That means you're selling the share at 6 Rand. You're selling the share at 7 Rand. That is the issue price of those shares. Right, now, if you look at this here, the full proceed of the share issue will be credited to your share capital account. Clear? That means if you sold shares to the value of 6 million rand, your two accounts involved will be, obviously, bank, because we're receiving the mullah, and you will credit your ordinary share capital with the full amount, the entire proceed of that particular share issue. In other words, this means, therefore, that this no longer exists. The share premium no longer exists. That account is non-existent. Please, again, an appeal to you. When you look at past papers, when you look at some activities that you may get hold of, and if you find this appearing there, make sure that you delete it and adjust the activity accordingly. Right? So even as far as educators are concerned, where we are working with past papers, educators should amend those questions, adjust them to indicate that the share premium does not exist any longer. That should be crystal clear to you now. Okay, right. So now, we're saying that the new shares may be issued at higher or lower than the price of the previous issue. So if I sold shares at 6 rand, I may sell the new shares at 7 rand or 8 rand, or I may even sell them at 5 rand, depending on the needs of the company. When it comes to your ledger accounts, there are 6 important ledger accounts that you will have to learn, right? And amongst them is this appropriation account here, which we will deal with in much more detail. And the reason for that is that the appropriation account is amongst the final accounts of a company. In other words, yes, you have a trading account, which looks identical to a sole trader's account. Number 2, you have a profit and loss account, okay? And that also is identical to a sole trader and a partnership. However, it includes a few new accounts like directors' emoluments or directors' fees, audit fees. Those are new expenses that we deal with in the profit and loss account. But of particular concern would be this appropriation account. And yes, we will deal with it in more detail. So now, if we look at the ordinary share capital account, this is my balance from the previous year, indicating that that's the balance, the value of the shares that have been sold to date, right? Number 2, this bank entry here indicates to you the new shares that have been issued during this financial period. Okay? So, take into account the balance. Ordinary share capital is an equity account, has a credit balance. Number 2, this bank entry reflects the new shares that have been issued or sold in this financial year. Right. Now you come across something that is new. Watch. This bank entry on the debit side of my ordinary share capital. What does it indicate to you? It indicates that the share capital account is decreasing in value. That's correct. Why is it decreasing in value? Obviously, there must have been a buyback of shares, right? And the contra account for this one here, watch, when we sold the shares, we said debit bank, credit ordinary share capital. That was the sale of the shares. Now, obviously, when we're buying back the share, what's my double entry going to be? Come on, guys, think about it. We are repurchasing those shares. The bank account is decreasing in value, therefore credited. So what do you debit? You debit, yes, your ordinary share capital account. That there is your repurchase of your shares. But And this is a very big but. What amount do we use here? What figure do we put in there? Do we put the buyback price? What do you think? Certainly not. You put in there what is called the average price of the shares. Aha, ringing a bell? Watch this here now. Bank is reduced by the repurchase value of the shares. For example, if you bought back shares to the value of 3,000, let's take a figure of 30,000 rand, right? And you find out that the ordinary share capital is reduced by the number of shares multiplied by the average issue price. Aha, average issue price. What does this mean? What does this mean to you? Watch this here. I think we've worked it out here for you. Watch. We had 1 million shares, which were in issue at the beginning of the year to give me a value of 3 million rand. Okay? Then we had 500,000 shares were issued in January at 4.50 to give me a rand value of 2,250,000. Now, the total number of shares that we have is valued at the number of shares, the actual number of shares is 1,500,000. As you can see, 1 million plus 500,000. But the value of those shares is 5,250,000. Now, this is where we bring in the weighted average. What do? We multiply the 5,250,000 by 1,500,000, which is your actual number of shares, and this will then give you what we call the average price per share of 3 rand and 50 cents. Now watch. These shares here, the 1 million, were sold, you can clearly see they were sold at 3 rand each. Clear? 1 million times 3 rand per share would give me a value of 3 million. Whereas these 500,000 shares were sold at 4.50 per share. Remember we said we can sell at a higher price? Okay? Now, what is the average of the shares that were sold? Immediately you see, add the number of shares. I'm stressing this because of its importance. You add the number of shares, which is 1,500,000, right? And you're going to take the value of the shares, which is 5,250,000, divided by the number to give me an average of 3 rand and 50 cents per share. Now, when you are doing a repurchase of shares, this repurchase of shares is going to be impacted on in the following manner. In my ordinary share capital account, I always put the average price, right? And you will notice then that the retained income is also reduced by the difference. This represents the income that had previously been retained in respect of the shares being repurchased. In other words, guys, if we use this example, just to give us more clarity here, if these shares were bought back at 4 rand, for example, the 3 rand 50 would go to my ordinary share capital account, the 50 cents will go to my retained income account, and the total of 4 rand would go to my bank account. So in other words, what are we saying? We are saying that in this year, let's look at it. There goes. We have the bank being reduced. I'm just doing one share to give you an example. The bank is reduced by 4 rand. Your share capital is reduced by 3 rand and 50 cents. And your retained income is reduced by 50 cents. So clearly you can see that the double entry is what? A debit to ordinary share capital with the average price, a debit to retained income with a price above the average price, and a credit to bank with a total amount. Don't you stray or go away.
Because when Ashraf is around,
don't fear.
don't fear.
When
Well, guys,
Ashraf is near.
well, guys, already some of you know our Facebook page. They're on Facebook. They're sending us questions. Do the same. It's facebook.com/LearnExtra. After the break, we've got exciting and cool stuff to be given away. So stay tuned. Welcome back, guys. Now, if you have started with your driving lessons, or already you've got a driver's license or a learner's, it's simple, guys. All you need to do is to be on our Be a Bright Spark competition. You stand a chance of winning a cool Chevy Spark. We've given away one to Dimakatso. She was cruising through with her friends, and now this could be your chance. So enter our Be a Bright Spark competition. But for today, we're giving away a voucher, a Google Play voucher worth 150 rands. All you need to do is to share, guys, the picture that is posted on our Facebook page. Make sure that you share it with a friend whom you would like, you would like him or her to be next to you when you're driving your car. So if I'd love Ashraf to be next to me when I win the car, I will share the picture with Ashraf and say Ashraf is awesome because he's the coolest teacher ever. So that's what you need to do, guys, and stand a chance of winning that voucher. The winner will be announced on our Friday live show. So share. Ashraf, I've got one question for you.
Yes, Abi, go for it.
The mindsetter is asking, why aren't we using the par value anymore?
Mindsetter, the par value is absolutely meaningless. It means nothing. It had no real value attached to it. That is why we now have what is called an issue price. If we sold it at 6 Rand, then the issue price would be 6 Rand. If we sold it at 7 Rand 50, it would be 7 Rand 50. That par value had no meaning at all. But a good question, I'll tell you why. Because now a share has its issue price, right? It has obviously the average we're going to work out for our purposes. And obviously, remember, a share has a market price, the price that the share is trading on the securities exchange. So, more about that in another lesson, obviously, but yes, different prices of the share, and another very important one, which I must mention to you, is the net asset value per share. What is that? That is the intrinsic or the real value of a share. But like I said, not for this lesson. In future lessons, you'll see where we talk about comparing the NAV, which is called the net asset value per share, with the market price and questions related to it. So just remember, no more par value.
Nice.
Okay, Amy?
Thank you, Picky, for your answer. And guys, if you also have that question or any question, please send it through to me.
No problem, guys. Okay, let's get back to our ledger. Now, remember we said we're repurchasing shares. So obviously, the retained income is an equity account which has a credit balance. Now, retained income are those profits that the company has made. But before I continue, let me ask you a question, mindsetters. The profits made by a company belong to whom? And the answer is, the profits made by a company belong to the company. And that is why you would find that the company would retain of its profits. Why would they retain? Very important question for examination purposes. They would retain for future expansion and growth, right? Or for equalization of dividends. Let me explain. If a company has a lean year and it wants to declare a dividend, right, to keep shareholders happy, obviously, then it may use from previous years' retained earnings. So once again, why do companies retain their profits? One, for future expansion and growth, and number two, for, like we said, for equalization of dividends. Got that? Right. So now you have a clear idea of what the retained income is all about. Now, obviously, this entry here from the appropriation would be that profit that we have retained this year, which gets transferred back to my retained income account. But more about that just a little bit later. Let's go back to this entry here. This is the one that we were busy explaining. Remember, what did we say? This one here is the buyback of your share with the price above the average price. You recall from the earlier segment, we alluded to this. We said the average price goes into ordinary share capital and the price above the average price goes into my retained income account. Okay, I hope that is crystal clear. Now, moving on. We now have the SARS income tax account. And if I ask you this question, and I say, what type of an account is SARS income tax? What will your response be? Do you know? The answer is, it depends. It depends on what? Definitely. It depends on the balance that appears in this account here. Now watch. In this case here, your SARS income tax account has a credit balance indicating that it is a liability. Clear? Now, if this balance perchance had to be on the debit side, then if you were asked the question, what type of an account is SARS income tax? Your response would be, it is an asset, because it means that SARS owes us that money. Yes, that's possible. How is that possible? Let's look at it. One, in this particular instance that we have here, we have a credit balance, meaning we are owing SARS money, right? Then, obviously, we pay SARS the amount that's due to them. Double entry, a debit to SARS income tax to reduce my liability, and a credit to bank. Then we have what we call two provisional payments. Okay? Those are my two provisional payments. Sorry, those two here. These are my provisional payments. That was the payment of the amount that was due to SARS. Let's just get it clear so you know what we're talking about. That was the amount that was due to SARS, and therefore the payment was made. But this one here reflects the two provisional payments. By company's law, we are compelled to make two provisional payments to SARS during the year. So there's my two payments. Double entries, once again, a debit to SARS income tax, a credit to bank. Got that? Simple. Once again, you know I love giving you secrets. Watch this here. Always start with the known entry. So if the transaction says, issued a check to pay SARS, issued a check, tells you bank is involved, bank is being reduced, credited, therefore a debit to SARS income tax. So if you start from the known, it makes your contra entry much easier. Got that, guys? Brilliant. Okay, then what happens? You now come to the end of the year, and you now receive your official assessment from SARS. And what do they tell you? This is your income tax for the year. Right. And if that is your income tax for the year, what's your contra entry? A debit to income tax. There's it. A debit to income tax. There's my contra entry. Debit income tax. Why are we debiting income tax? Because it's an expense unique to the company. It is an expense unique to the company. Therefore, you debit income tax. Look at my contra account. A credit, that's right, to my SARS income tax. There's my contra entry. And what do I now do? I now balance my SARS income tax account, and it's either going to end off with a credit balance or a debit balance, depending on whether my assessment was greater than my payments or whether my payments were greater than my assessments. That's it, guys. That's your SARS income tax account. Okay. Now we come to our shareholders for dividends. And here, if you are asked the question, what type of an account is shareholders for dividends? Clearly, your answer is very simple. Shareholders for dividends is a liability. There can be no other option different to your SARS income tax. Shareholders for dividends is a liability. That's what we're owing our shareholders from last year, and that's the amount we're going to pay them at the beginning of the year. Right? Then what happens? Watch. During the year, the companies will pay an interim dividend. Now be careful. Any dividend that is paid during the year, what's my contra entry? My contra entry is a debit to ordinary share dividends. Why? Expense unique to a company. It's an expense. It's going to reduce our equity. Therefore, we debit ordinary share dividends, and watch, my contra is bank. Why? Because I'm paying for it. Money is leaving the bank account of the company. Therefore, double entry, a debit to ordinary share dividends and a credit to my bank account. Which one? The interim dividend, when declared sometime during the financial year. Right. Now we come to the end of the year. The company directors declared a final dividend. Okay, so if they declared a final dividend, watch, no payment, no mention is made of bank, therefore no bank account involved. So where's my double entry? A debit to ordinary share dividends, right? A debit to ordinary share dividends. Watch my contra account. Shareholders for dividends, meaning I haven't paid them. I'm owing them that money. And therefore, you get this contra entry coming through from your shareholders for dividends into your dividends for ordinary shares. So once again, when a final dividend is declared, contra entry, debit ordinary share dividends, there we go, and a credit to my shareholders for dividends. Notice, nothing is mentioned about bank. Why? The final dividend is declared, not paid. Clear, guys? I hope that's crystal clear to you. What happens now? All of this means that you balance your balance sheet accounts, ordinary share capital, retained income, SARS income tax, shareholders for dividends. They are balanced. Your nominal accounts, what do you do to them? Watch. Your nominal accounts are closed off to your final account. Remember, I alluded to this in the beginning of the lesson. I said, watch out for this appropriation account. It's very, very important. Notice, you close off your income tax to your appropriation, closing transfer, you're closing the nominal account, transferring it to your final account. This journal entry is called a closing transfer. A debit to my appropriation, a credit to income tax. Here goes. Notice that the income tax account is closed off to your appropriation. By the same token, what happens to our ordinary share dividends? Same story, guys. Expense account closed off to my appropriation. Watch here. Here goes. In my appropriation account, there's my income tax, there's my ordinary share dividends, right? I transfer my profit from my profit and loss account into my appropriation account, and voila. What do we find? We find that we have retained a certain portion of the income. Got it? We've retained that income. What do we do with that retained income? I hope you remember. What did we say? In our retained income account, there's it. There's that appropriation amount that you transferred from your appropriation account into your retained income. Those are the profits that you kept back. How are we doing, AB?
We're doing fine.
In terms of our time left for this segment?
Yeah, you can just finish up.
Can we just finish up this, and then when we go back, we'll do an actual activity with our mindset.
Yes. Yes.
Right, guys. So what are we saying? If we have to conclude now, there's just one more thing that I need to do with you in terms of your appropriation. Watch. Notice this appropriation is slightly different. Why? There's an alternate to it. Yes, your income tax is there, your ordinary share dividends is there, your profit and loss is there, but you bring in your retained income at the beginning of the year into this account here. Now, this is just an alternate way of dealing with the retained income. However, my preference is use this method here. Both are acceptable and examinable, but this one here is the one that I prefer, and I would love you guys to use this method, but you can use any other method, so don't worry about it. Okay, so now in terms of this here, you can clearly see there's different ways in dealing with the appropriation account. Got that? Okay, guys, let's take a breather, take a chill pill, and after the break, we do an activity.
Of course, guys, so don't go anywhere. If you have some questions, be on our Facebook page because we'll also be taking some of your questions. Stay tuned. Welcome back, accounting buffins. Now, guys, if you're studying metric, of course, as you're watching this show, you are on metric. Next year, you're probably thinking that you're going to be studying somewhere at university, but have you thought about accommodation? Well, if you have, we're giving away 1 year's free accommodation, so your 2016 could be just a luxury life, living in a nice place. Watch on the page. Tomorrow we've got this exciting competition that we're launching, also on our website, and keep your eyes glued to your screens. We'll be telling you more about that.
All right,
Ashraf?
let's take some questions there, Abi.
Cool. Piki Malikana says, why in appropriation account we record in debit side, not in credit account?
In the appropriation account, why do we record?
In the debit side,
Okay,
and
that's
not
fine.
in credit account.
Okay, all right, okay, fine.
Another one,
Yes.
Bonisi Langa, why doesn't the appropriation account not having retained income on the credit side?
Okay. Guys, do not confuse yourselves with the two different methods of dealing with the appropriation account. Remember, it's either method 1 or method 2. Clear, guys? Don't confuse the two, please. You either use method 1, whereby you only use your retained income at the end of the year as a balancing figure, which you transfer back to retained income, or you use the second method, whereby you bring in your retained income at the beginning of the year, remember, and this will become your retained income at the end of the year. So I'm saying you have a choice of which method you want to follow. Right. There is a third method as well, but I don't want to confuse you. Use one of these two methods here.
All right,
Okay.
last question for you.
Sure?
Piki says, why the profit does not go to the shareholders?
Remember, the company, in terms of Companies Act, in terms of IFRS, in terms of GAAP principles, the company is a legal personality. The profits made by a company belong to the company. Got that? Great. That's why profits made by a company belong to the company. What will the company do? The company will distribute that profit in the form of a dividend. That's what the shareholders will get. Okay, Abby? Cool.
Yep.
Can we move on?
Yes.
Right. Here's our question. Our question says, use the given information of Davy Limited to do what? To draw up the following ledger accounts: ordinary share capital, retained income, SARS income tax, ordinary share dividends, and the appropriation account. Specifically, these are the accounts that we have to draw up. Okay, starting with our information. Davies Limited has an authorized share capital of 2,500,000 ordinary shares. Remember, authorized is the maximum number of shares that the company is allowed to sell. That's it. It's just the number of shares that the company is allowed to sell. Okay. On the 1st of July 2011, they issued 1,500,000 ordinary shares at 3 Rand each to the shareholders to start the company. So obviously, this would now mean that if you look at your ordinary share capital account, you've got a balance in this account here, right? And you're going to find me abbreviating because, AB, I've got a license to abbreviate.
And they don't.
And you don't have a license. Make sure that you write it out in full in the exams. Right. So what was it again? It was, my balance was 1,500,000 at 3 Rand each. So immediately I say fine. 1,500,000 times 3 will give me a value of 4,500,000. What is that, guys? That is the balance in my account of 4,500,000. Okay, that's the balance in my ordinary share capital account. Okay, then what do I know? They're telling me that these balances were extracted from my retained income. So therefore, in my retained income, I've got a balance of, where's my balance? 650,000. So therefore, in my retained income, balance of 650,000. That's my balance in this account, because retained income is an equity account with a credit balance. Okay, then, what am I told? Shareholders for dividends, I'm owing them 180,000 Rand. Okay? And you can clearly see that my SARS income tax has a debit balance of 8,000 Rand. Okay, now the shareholders for dividends is an account that's not asked for. All that I know is I'm owing my shareholders 180,000 Rand. But my SARS income tax is an account that's asked for, it's required. So, 8,000 Rand. Notice on the debit side. And once again, if I ask you, what type of an account is SARS income tax? Your answer in this case will be, it's an asset, because it has a debit balance. Generally, if I ask you the question, what type of an account is SARS income tax? Your answer will be, it depends. On what? On the balance in this account. And therefore, matric boffins out there, be careful. Whenever you're working with SARS income tax, always go back and see, where is my balance appearing? Does it appear under trade and other receivables? Is it a debtor? Or is it appearing under trade and other payables? Is it a creditor? In this case, a debtor of 8,000 Rand. Okay, now, what happens? We paid the shareholders the amount due to them as per last year's the final dividend declared. Double entry, debit shareholders for dividends, credit bank. Not required, so I don't worry about it. It's not a required. They didn't ask me for that account. The company will make 2 provisional payments, right? In August and in February, totaling 360,000. The first payment will be made whereby we will offset the amount due to be refunded by SARS for last year's overpayment. Right. So, if we're paying a total of 360,000, immediately you tell yourself, fine, 360,000, we're making 2 payments of 360,000 divided by 2 will give me a figure of 180,000 per payment. However, watch this closely. I cannot make a payment of 180,000. Why? I will make a payment of 172,000 as my first provisional payment. Why is that? Because SARS owes me an amount of 8,000 Rand and I owe them 180. I subtract the one from the other. 180 minus 8 will give me 172. So my first provisional payment will only be 172,000. Obviously, the second provisional payment will definitely be 180,000 Rand. Got it? So clearly you can see the reason why that payment only amounts to 172, because SARS were owing us money at the beginning of the financial period. Okay, back to my question. The company declared and paid an interim dividend of 14 cents per share. This one here we're dealing with. The company declared and paid an interim dividend of 14 cents per share. Right, now we go back and we ask ourselves, how many shares did we have in issue at that point in time? At that point in time, we had 1,500,000 ordinary shares. Therefore, we say, fine, let's take the 1,500,123, okay, times, we declare a dividend of how much? An interim dividend of 14 cents per share, times 0.14, to give me a value of 210,000 Rand. Double entry, credit bank, debit ordinary share dividends, okay? So, ordinary share dividends, 210,000 Rand, and that is my bank figure. Remembering, guys, that this is my interim dividend, and at that point in time, how many shares did we have in the market? 1,500,000. Therefore, we took 1,500,000 times 14 cents per share, which was the dividend, therefore giving me a value of 210,000 Rand. Okay, back to my question. Now, the company issued a further 300,000 shares at 4.20 each. In other words, we sold more shares. Immediately, you ask yourself the question, two accounts involved. Yes, we're receiving money, bank, debit to bank. How much are we receiving? Immediately, we take out our calculators once again, and we say we sold 300,000 shares, so 300,000 shares times, we sold those shares at 4.20 Rand, meaning we raised another 1,260,000. Is that correct? 1,260,000. Okay, immediately you go to your ordinary share capital and you say 1,260,000, and that is your bank figure. Can you see? A debit to bank and a credit to ordinary share capital. Right, back to the question. So, that is done and dusted. What happens now? The company buys back 50,000 shares at 4.60 Rand. Aha, what must I do? The moment, at the point that you see you have a buyback of shares, immediately it should ring a bell. Calculate the average price. To what? Calculate the average price. Let's do that. In my ordinary share capital account, I've got a figure of 4,500,000. 4,500,123, okay? Plus, I have another figure of 1,260,000. 1,260,123. 1,260,000 is equal to 5,760,000, represented by how many shares? Let's find that out. Remember, we had 1,500,000 plus 300,000. That gives you 1,800,000. So, divided by 1,800,000. 1, 2, 3, to give me a value of 3 Rand and 20 cents. 3 Rand and 20 cents is my average price per share. Okay? And how much did we buy back these shares for? 4 Rand and 60 cents. So immediately you tell yourselves, 4 and 60, you can see there's a difference there of 1 Rand and 40 cents. So the 3 Rand 20, 1 minute, the 3 Rand 20 will go to my ordinary share capital. That means in this account here, I'm going to calculate 50,000 shares, which I bought back. $50,000 times 3.2, which is my average price, 160,000. Can you see, guys? 160,000 is my bank figure coming from where? From my ordinary share capital. Why? That was the average price of my shares. Okay, then, if we look back and we ask ourselves, how much did we buy back those shares for? Those shares were bought back for 4 and 20. So immediately we tell ourselves here, that was 3 and 20, am I right? We worked that out, didn't we? Okay, so fine. So if we bought back the shares at 4 and 20, so 4 and 20, let's put in the digits, 4.2 minus 3.2, which was my average price, giving me 1 Rand. Why did I work out 1 Rand 20 earlier on? Let's go back and check where are we going wrong. Let's check again. Let's go through this again. We're saying here that we bought back shares at 4 Rand and 60 cents. Okay, there's the error, right? So, if 4 and 60 was the buyback price in total, the average price was 3 Rand and 20 cents. Okay, now it's making sense. Let's do that. 4.6 minus 3.2, that gives me that figure of 1 Rand and 40 cents, which was above the average price. So we take the 1 Rand 40 times number of shares was 50,000 to give me a value of 70,000 Rand. Watch here. This is important. In my retained income, the 70,000 Rand, there's where it comes from. Once again, multiply the number of shares by the price above the average price, and that 70,000 Rand is now your bank figure coming from the repurchase of those shares. So, what do we have to remember in all of this? Remember, take away the price above the average price, take that to your retained income, take your average price into ordinary share capital. Okay. Now, what else happened here? They said the company made a net profit after taxation of 30,000 Rand, which amounted to 945,000 Rand. Watch. You know, I hope you know what this means. Read the full question. Yes, guys. The net profit for the year after taxation of 30% amounted to 945,000. Watch this, please. Very, very important. What are we saying? 945,000 is equal to 70%. Why am I saying that? Because I'm told here that, let's look at the information. $945,000 is equal to 945,000 is equal to my 70%, because my rate of taxation was 30%. 30% is equal to my unknown. What do we now do? We now solve for x. 945,000 times 30 is equal to 70x. X is equal to that divided by 70. So let's take our calculators and we say, fine, 945,000 times 30 divided by 70 is equal to 405,000. What is the 405,000? The 405,000 is my income tax for the year. So, in other words, what are we saying? We are saying that in our appropriation account, we're going to have income tax of 405,000 rand. What I've done here is I've taken the income tax directly into the appropriation account. Obviously, what you could have done or what you should have done is done the entry in terms of debiting income tax, crediting SARS income tax, right? This entry here of 405,000 rand, whereby you debit income tax and credit SARS income tax. I've shown you the entry directly into the appropriation account of 405,000 rand. Right, next step. Now you calculate your final dividend. They told you a final dividend of 9 cents per share was declared, right? How many shares do we have left over? Remember, we had 1,500,000 which we sold at the beginning. We sold a further 300,000 shares. That was 1,800,000. We bought back 50,000. That gave us a figure of 1,750,000. So therefore, 1,750,123 times 9 cents would give me a figure of 1,575,000. All that I'm doing for you now, and what I want you to see, which is important, is in this account here, in your appropriation account, you're going to bring in your ordinary share dividends, right? You're going to bring in your profit and loss figure. Now remember, you cannot use this figure here for your profit and loss because this was your net profit for the year after taxation. So what do you have to do? You have to add back your taxation to find out what was your profit and loss figure before taxation. Take that figure and bring it into your appropriation account, right? Bring in that figure here, subtract your income tax, subtract your dividends. Now remember, which dividend is this? It's your interim plus your final. It means take both those dividends, add them, include them here, and the difference between this will then give you your retained income that you have at the end of your financial year. Okay, guys? So, what we are saying is that if you understand the basic explanation behind these ledger accounts, this appropriation account, you will always use it, especially when you're doing the balance sheet and you're asked to do the note for your retained income. Obviously, in other lessons, we'll be talking specifically about these here.
And thank you so much, Mr.
I just
Ashraf.
hope you guys enjoyed the lesson. Once again, guys, remember, I have to say this, aim for the moon.
Exactly.
If you
Well,
don't get
guys,
there, you're a shining star.
Indeed. Well, guys, for this 10 seconds, we just want to appreciate you guys for watching this show. And thank you to MTN SA Foundation for sponsoring the show and Department of Basic Education for proudly supporting us. We really appreciate you guys. And up until next time, we love you and peace.